Hello there. Welcome to Course and Management Accounting N6. I would like to look at a question from June 2023, question 1. And the question reads, choose a journal entry from column B that matches a transaction in column A. Write only the letter A to I next to the question number, that is 1.1.1 up to 1.1.5 in the answer. So we're gonna go, we are seeing that we are having some transactions in column A, and then we've got some journal entries that are listed in column B in terms of debits and crediting, right? We look at the first transaction, which is saying under recovery of manufacturing overheads. So we are going to look at a journal entry that is matching that one. But what we know is whenever there's an under recovery, there's a loss. So it means that is a cost that we need to transfer from the manufacturing overheads account to the cost of sales account. So if you look at our options there, the only option that we are seeing with cost of sales is D, and we see what that the journal entry is saying. It's saying we debit the cost of sales and then debit the manufacturing overheads, which is correct, because this figure will be in the manufacturing overheads account. So it will be on the debit side. So we need to transfer it to the cost of sales. So credit cost. So we credit manufacturing overheads, then we debit cost of sales. So it means that on the first one we have D. Then we go to the next one, 1.1.2, cash purchases of direct materials. So here we are seeing that there's cash, so there's bank account that is involved, and we're seeing that we are paying, so money is going out of the business. So we are going to credit the cash, since we know that the bank or cash is an asset account, is a normal debit balance. So when something is moving out of bank, which is money, we need to credit it. So we are crediting bank there, and obviously we have got the material that is being paid. So we are going to debit material account as the next, the other account. So we see that E is not appropriate there. So we are going to put there E. Then we go to the next one. Which is 1.1.3. It's saying indirect material issued to production. And we are seeing that this indirect material is under the production overheads. If you remember, in the manufacturing account, under the production overheads, you've got indirect material that we charge there. So we are transferring this indirect material to production, and it's coming from the material control account. So we look there. If we have got the material control and production overheads, we are not seeing such one. Let's look at the other option that we have below there. Right. If you look at G, we have got the manufacturing overheads and material control, and this material is being taken from the material control because this material control is an asset account, which means it will be on the debit side. So when we are transferring it to the production process, we are crediting it as we are subtracting it. Then we take it to the manufacturing overhead as a cost now. So G is most appropriate there for 1.1.3. Then 1.1.4, indirect labor allocated to production. And we know indirect labor is under the production overheads, again, manufacturing overheads. So we are going to debit the manufacturing overheads, and obviously we've got labor involved there. So we've got the labor that is there that needs to be opened again. So we are seeing we have got a journal entry there at the beginning, which is labor control. We've got a journal at the beginning there which is labor control, but it's crediting labor control and debiting production control, which is not correct. So let's move on to look at the last option that we have there. Right, this one we have got crediting labor control and debiting manufacturing overheads. Remember, this is indirect labor, which is going to be under the manufacturing overheads. So I is the most appropriate here. So we're gonna put I here. Then we are left with 1.1.5, which is saying finished goods transferred from the factory. So after manufacturing this product, these goods, they become finished, and we transfer them to the trading account. So when you transfer them as finished, they are going to increase the inventory that is there. So the most appropriate there, if you look at C, the finished goods are going to be debited. So the finished goods are the same as the inventory, representing finished goods. So we debit finished goods and then we credit production control. So C is the most appropriate there. So that's enough on the first question. Then you move to the next one. Right, let's look at the question that is below that. Below that, we've got sunshine contractors, and saying sunshine contractors commenced with this contract in the current financial year. The following information was extracted from this record. We've got information from contract price up to we have cash received there at the bottom of 750,000 rands, and then we need to go to the first question, which is 1.2.1, which is saying, is the above contract complete or incomplete? So what we have to do there, we have to compare the contract price. We have contract price to check whether it's complete or incomplete. We say contract price plus extras. Then you compare it with the figure of certified work. Certified work. But we are seeing that on certified work, we 800,000. So contract price plus extras, we have got 4 million. Then we add 500,000. 4 million, this 4,000, and we other 3 zeros here. Then we add 500,000. So obviously, we are going to get 4,500,000. So then when we compare this figure with this figure, we see that they are not equal. So if they are equal, that's when we say it's complete. But if they are not equal, it's incomplete. So basically, this incomplete is the most appropriate there. So they're saying give a reason for that. The reason that we can give there is that the contract price, the contract price here, the contract price, plus extras, contract price plus extras is not equal. Contract price plus extras are not equal. Are not equal to certified. Are not equal to certified work. So that's the reason that we can give there according to 1.2.2. Then we move down to see what's next to here. We don't have anything there. Then we move on to the next page to see the next question. Right, the next question is saying calculate the adjusted profit in the contract. Calculate the adjusted profit in the contract. But we can find this adjusted profit by using this formula, which says provision for latent defects. Provisions for latent defects plus adjusted profits plus adjusted profits. When you do that, we should get the profit figure. This is total profit figure. Right. Then from our information, let's try to see in that formula what information do we have. We go there, we see that we only have the figure for provision for latent defects, which is 15,000. But we are being told that it's 15%. So we go back to use that information. The other information, we don't have it. So it means here we only have the information that latent defects are 15,000 and they are equal to 15%. So the figure that is being asked there, the figure that is being asked there is adjusted profit. So what it means is this figure for profit represents 100%. This is 100%. And then this for latent defects, we are being given that is 15%. So the figure that we want is adjusted profit, and we don't know what we can find the percentage now for adjusted profit by saying 100 minus 15 to get what adjusted profit. So adjusted profit is what 85%. So here you can just use proportion to find the figure for adjusted profit by saying adjusted profit is 85%. Now we want to find the value there. So the value, obviously, we go the side where we have both figures, and we see that the figure that we are looking for is a bigger figure. So this side with both sides, we put the bigger figure above. So it becomes 85 it becomes 85. Here it becomes 85 over 15. 85 over 15 times 15,000 over 1. So if you do that, if you calculate that correctly, you get 85,000. So here is 85,000. So this is the figure that we have for adjusted profit. So this is adjusted profit. So how can you get we can get adjusted profit? Then the next one is saying calculate the uncertified wage. Calculate the uncertified wage. We need also to come up with a formula there. Right. Uncertified wage, let's try to bring a formula. On that one, we can use a formula that says uncertified wage uncertified wage is equal to total cost to debt. Total cost to debt. And then we add provision for latent defects. Provision for latent defects. And then we also add adjusted profits. We also add adjusted profits, and then we less certified work. Right. So now we want to put it in figures. Total cost. We go back to the information that we have. We are seeing that total cost to date is this one, which is 2 million. And then provision for latent defects, we are given this way 15,000. And then adjusted profits is the one that we calculated 85,000. And then certified work is year 800,000. So those are figures that we're just going to substitute in that formula. And when we go back there, we are going to say, let's try to substitute that one. When you go back there, we're going to say 2 million. 2 million, and then we add 15,000. 15,000 is appropriate for latent defects. And then also add 85,000, the figure that we found there for adjusted profit. Then we subtract the figure for certified work that we saw there is 800,000. Then let's try to calculate that one. If you calculate correctly, you're supposed to get 1.3. Right. So this is the answer there for uncertified work. Then we try to find out the next question there from uncertified work. So that marks the end of the first part there of 1.2. Then we go to 1.3. 1.3 is saying big masters manufacturers produce kitchen cupboards. The following standard information was accepted from their records, and we are told that we are told here that 4 labor hours are needed to make one cupboard. Very important there. Then we've got the standard price for labor, which is 250 for 2 hours. So it goes on and say at the end of the period, big stars manufacturers actually produced 1,000 cupboards during 4,500 labor hours. The business paid 550,000 rands in wages at the end of the period. Then 1.3.1 is saying how many labor hours was the business supposed to use to produce 1,000 cupboards. Show all workings. Right. We are told that if you come here, they are saying 4 labor hours are needed to make one cupboard. Then they're asking us about 1,000 cupboards. So that's clear. If one is supposed to 4 hours, what about 1,000? So we are just saying 1,000 times 4. Then you get 4,000. Right. When we do that, that's our answer for 1.3.1. Then we go to the next one. Did the business use more or less labor hours than planned to manufacture 1,000 cupboards? Set more or less, and by how much? So if you look here, the business used 4,500 labor hours, but the standard one was 4,000. So it means it used more. It's clear there. So the answer here is more. By now, which we say 4,500, that is they used minus the ones they were supposed to use. Then you get what? 500. So it's by 500. By 500 couples. By 500 couples. So that's our answer there. Then go to the next one, which is 1.3.2, saying did the business use more or less labor hours than planned to manufacture the okay, this is the question that we've answered. So we'll go to the next one, which is saying give 2 possible reasons for question 1.3.2. So the reason that they want there is why did they use more labor hours than required? So obviously, it means the workers were the ones who were dragging, they delayed production. So the reason that we are going to raise there is that maybe also there was poor supervision in terms of the supervisors were not fully supervising their support needs, so that we don't have delays, etc. So one of the reasons we can say poor supervision. What supervision of workers? That's one of them, poor supervision of workers. And also maybe the equipment that was being used was not up to scratch. It was not producing as expected. Maybe it was old. We can say also use of old equipment. Old equipment underperforming. Right. So this can be the 2 reasons that we can include there, and any other reason, correct reason can also be applicable. Then we go here. On 1.3.4 is saying how much was the business supposed to pay in wages to make 1,000 couples? So how much was it supposed to pay in wages? So we need to know in wages to pay the 1,000 couples. We need to know, we already know that they spent 4,500 hours. So we need to know how much is 1 hour. How much is 1 hour? We need to know how much is 1 hour. And we can only find that there at the beginning of the question there. That's where they stated there is. Right. If you go there, they're saying the standard price of labor is 250 for 2 hours. It's 250 for 2 hours. If two hours are 250, what about 1 hour? We're just going to say 250 divided by 2. So if you do that, you say 250 divided by 2, there we're going to say 1, then there we also get you get 2, so 125. So this one will be equal to 125. So this is the rate per hour, 125 per hour, and we have got 4,500 hours. So we are going to say now 4,500 times 125. So this 4,500 hours, it has multiplied by 125 hours. Then if you do that, you're supposed to get 562,500. Remember, this one is money in rands, 162,500. That's our answer there. Then we go to the next one again. We put the next question there. Right. The next question is saying break even value is there, and then selling price per unit is there, and then variable cost per unit is there in that table. But at the beginning of the question, they're saying the following information was extracted from the records of Sunshine producers. Then we are given the table, then the 1.4.1 saying calculate the break-even quantity. Right. When calculating the break-even quantity, we know that break-even quantity, the formula that we can use there is that fixed cost over selling price minus variable cost. So if you look at the information that we have, we don't have fixed costs, we don't have variable costs. The variable cost is there, and then selling price is also there, but you don't have fixed costs, so you cannot find the break-even point. That's a problem. So alternatively, we can also use another formula there. Let's try to find another formula that we can use there. We can use another formula which says the break-even value divided by selling price per unit. Break-even value, break-even value divided by selling price per unit. So if you look in our question, the break-even value is 850,000 and selling price per unit is 500. So we're going to say 500. Here we've got 500. 500 into 850,000. You are supposed to get 1,700. So 1,700 is our break-even quantity. Right. Then we go to the next question. Right. On the next question, they're saying calculate the marginal income per unit. We know that the marginal income per unit is the one that leads us to contribution. It says selling price minus variable cost. As simple as that. So our selling price there is 500. Our variable cost per unit is 350. These figures will be per unit. Then they're asking us pay marginal income per unit. So if you do that, you get 150. That's our marginal income. Then we go to the next one, 1.4.3, calculate the fixed cost. Calculate the fixed cost. Remember, there's a formula that we have there that says fixed cost is equals break-even point is equal to fixed cost over selling price minus variable cost. So the formula that we have here, this one is the formula that we are going to use there. So we are going to say our break-even point, we are given its quantity is 1,700, then equal to our fixed cost is the figure that we want. Then our selling price is 500. We subtract our variable cost, which is 350. So if you do that, you make a fixed cost charge on the formula, it becomes 1,700 times 150 equal to fixed cost. Suppose if you say 500 minus 350 to get 150, then you multiply by 150 both sides, it will come here and become 1,700 times 150. And then the answer for fixed cost that you are supposed to get there, let's try to multiply there, you get 255,000. So this is the figure for fixed cost. Then we go to the next one. Briefly explain what the break-even value of 850,000 means to this business. But basically, when we have a break-even, at the break-even point, that's when the sales revenue are equal to total costs. So the business is not making a profit, or is it making a loss? So it means total sales revenue minus total cost is equal to 0. So that's what it means. So the question is saying, briefly explain what the break-even value of 850,000 means to this business. It means that they need to sell. 850,000 runs to achieve 0 profits. Because we are saying at break-even point the profit is 0. So they need to sell 850,000 run to sell 850,000 runs to achieve 0 profit. Then we go to the last question. The last question is saying 5 advantages of a budget. So we're going to try to bring out the 5 advantages that we can have there. So 5 advantages of a budget. There are many advantages that we can raise there in terms of a budget. But basically, whenever we prepare a budget, it acts as a control measure in terms of if it's not achieved, we know that we didn't do well. So it can be used as an evaluation tool. A budget can also be used as an evaluation tool. Right. They are saying 5 advantages. So 1, it can be used as an evaluation tool. Then the second one, we can also look for another one that we can include there. It can also be used. It can also be used to assist the planning of the annual operations of the entity. Assist the planning of the annual operations of the entity. So we have 2 so far, and they need 5 of them. Can as well include others there. Let's look for the third one. Right. If you look for the third one there, we can see that it can also act as a motivational. It acts as a motivational. It can also act as a motivational tool. It can also act as a motivational tool. Can be used to motivate our workers so that they need to work within the budget and they know what to do. So that one is the third one. So we look for the next one. Can be used to expose weaknesses. Can be used to expose weaknesses in the organization. Because when we do a budget, we are planning and we are setting standards. And when we don't achieve those standards, it means we failed somehow. So weaknesses of a business are highlighted. So it can work as it can be used to expose weakness in the organization. Then the last one, let's try to look for the last one. Can be used to coordinate. Can be used to coordinate the different functions. Can be used to coordinate the different functions of the organization. Right. So these are some of the advantages that we can deduce from the use of budget, but we can as well try to look for other advantages which are appropriate. So that's what we have, guys. Let's keep in touch and stay tuned. Let's subscribe for more videos. We are going to be together until we write our exams. With that, I am out.